And hi everyone, and welcome along to our Sunday market analysis show. Special show today. We are a little bit lucky. We will have in the room today. We're going to have a couple of changes. We've got Lloyd is held up by weather conditions in Singapore. So joining us today, in addition to Alexis and Ash, will be Julian as they have a look at the market that's ahead. Great to see so many people in the room many of them coming straight from Julian's exclusive Actions to Wealth education piece. So great to see you guys all in. And just waiting, Maya, if you'd be able to see if Alexis and Ash are in the room and need to be given some powers. Look like it. Julian, can I? Oh, here we go. Ash, looks like we can go look. So again, a bit of a special treat for all of you guys. Great to have you along today. My name is Paul Bottrell, and I am the founder of Actions to Wealth. It's my pleasure to have the team join me today. We're going to have a great session. We're going to have Ash lead us away. We'll follow it up, and Ash will be in. He'll be in next. We will have Alexis follow it up, and we will have Julian after that. Julian coming straight out of a session. He's just on interest rate yields. I think we'll have a bit of a follow-up to that and some market overview from him as well. So going to be a great session. Lloyd, unfortunately, held up in weather in Singapore and can't join us live. Ash, are you with us?
Oh, yes, I am, mate. How's things?
Mate, things are great. Been another big weekend, hasn't it? The Wave Rider update yesterday. We updated the company on the new strategy. Been a long day of teaching yesterday, and nice to be back. Julian's just done his interest rate thing, which was great, and now we're going to get some market analysis from you. So, Ash, start of the month, are we doing FTSE today, or are we doing data today?
I think we're on data today, actually, but I mean, it's going to link in some respects to the FTSE.
Hey everybody, let's leave it to you, buddy.
Okay, so let me share my screen so you guys can see what we've got with the COT data. I've got somebody needs to give me powers on the other one that I'm signing up, if possible. Would be great. There we go. That looks better already. Right. So what we got is this. So let's have a look through this this data here. So the reason that I was saying that the FTSE may well link in is that the most notable thing right now is what's going on really with the US equities. You know, what's happening with the S&P, what's happening with the NASDAQ as well. So when we go down here, where is my NASDAQ? There we go. The NASDAQ really, when we look at this, we can see the moves to the downside that we've seen with the NASDAQ, and the NASDAQ also started to collapse on Friday, and there was some pretty heavy news, I think, from Russia. It sounds like Joe Biden is a little bit concerned with the fact that Russia may well be on the move, and the NASDAQ seemed to be the one that was, out of all the indices, it's going to be the one that's going to suffer the most. When the indices come down, which I think inevitably they will do, it will be the NASDAQ that will probably lead the way, and the reason for that is that when the equities were going up, the NASDAQ led the way. So we're likely to see the NASDAQ come down and come down hard. But what I think is quite notable about the NASDAQ is the numbers aren't particularly negative. You know, when we're sort of looking at this, we do see a little bit of a pickup here in buying and a little bit of a pickup in selling. So there's a slight disparity between the two numbers going on here. Whereas what we see back here is when they started to split, we started to see the sellers start to build up and the buyers just come away, and eventually the NASDAQ starts to fall. But we're not really seeing that now. So I suppose the reason that I think this is quite notable is that it's suggesting that we may not have the right timing for the equities to just completely sell off. So when we do get these dips that are coming into play with the S&P and the NASDAQ, the likelihood is that they're probably going to remain within a pattern. That's what the COT data is suggesting, that they're more likely to remain in a pattern and remain in a range rather than just collapse. So while everybody's panicking, then there's going to be some people scooping up a couple of deals just towards the end of the quarter. Now, if we also look at the seasonal picture for the Nasdaq, the seasonal picture is a little bit messy. It kind of it starts to rally around about mid-February, then it starts to come back down again. But then we start to see a really big rally potentially towards the end of March. Will it come this year when we got things going on with interest rates? I'm not so sure, because Julian's probably already covered this, but the Fed are either going to choke the economy, which is going to bring money out of it, which is going to affect equities, or they are going to have to do an out-and-out reversal, and then there'll be a little bit of panic as people readjust. When you then start to look at other risk-on assets from that, then it does actually show Australian dollars still looking relatively strong. So you could start looking around then and saying what's risk on and what's risk off. And what the COT data is suggesting at the minute is that we may not quite be in that out and out risk off phase just yet, not just yet. So we will hold our breath. So I don't know if you wanted me to expand on that at all, Paul, or I can discuss how it will link to the FTSE. If you like. I'm quite happy to kind of get into that as well, because the FTSE has been a very interesting. Okay.